Business has always been about turning a profit, making money. But can it stand for something more? Something beyond dollars and cents? We think so. We think that today, business has a higher calling, a purpose to be fair and just, to do right by their workers, customers, communities, and the environment. And it turns out companies successful doing that also do better for their bottom line. When you see the Just Capital seal, it means this company is a force for good. Visit justcapital.com to learn more.
And good afternoon. We are doing it live right here, Mottek On Money, live on the air Monday through Friday, 790 KBC at 4 o'clock in the afternoon. It's Mottek On Money, live on the air, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast at kbc.com, Apple, iTunes, and all your favorite podcast platforms. The stocks have finished higher today with mega-cap tech companies driving the gains despite worries that a hotter-than-expected latest inflation reading could delay the Fed's interest rate cuts until the second half of 2024. The S&P 500 moving up 57 points, settling at 5,175, and that puts it at a record high, the 17th record high close for the large cap benchmark index this year. The Dow coming in for a closing gain of 236 points, and the NASDAQ gained 246, settling at 16,266. All the major averages at or near record highs. The three major averages also seeing their biggest one-day point percentage gain since February 22nd. The yield in the 10-year note, which we watch closely because that impacts the fixed-rate mortgage rates, has moved a bit higher today. We'll be talking mortgage rates later this hour with Fred Solomon, the president and top guy at the company Solomon Mortgage and Real Estate based here in Southern California. We see that New York Community Bancorp stock rising today after the lender closed a $1 billion capital infusion led by former Treasury Secretary Steven Mnuchin's private equity firm. New York Community Bancorp stock moving up nearly 6%, also revealing plans for a 1-for-3 reverse stock split as it issues 525 million shares of common stock as part of its capital raise with Steven Mnuchin's Liberty Strategic Capital, as well as funds managed by Hudson Bay Capital Management and Reverence Capital Partners, according to MarketWatch. This reverse stock split, by the way, would allow the bank to bump up its share price beyond the low single-digit level where it has fallen in recent weeks. NVIDIA back in the spotlight. That stock surging about 5.5% after completing a dramatic reversal lower last week. Meta moving higher among the mega cap stocks moving higher today, moving up about 2.5%. Microsoft shares up about 2.5%. We'll be talking about this here in just a moment with our top market analyst. Also coming up later this hour, we'll be speaking to a mega entrepreneur who will be joining us this hour, entrepreneur, investor, and media mogul Robert ELLIN, founder of Live One, who will be appearing at the Roth Conference in Dana Point next week. And mortgage rates appear to be easing just in time for the spring home buying season, but home prices kissing record highs. We'll get an update this afternoon from Fred Solomon with Solomon Financial Mortgage and Realty based here in Southern California. But right now in your money, the markets and the economy, joining us live now is Ken Winans, money manager and president of Winans Investments, market historian, author of Investment Atlas 1 and 2, and also Forbes magazine contributor. Ken, thank you very much for coming to the line here and give us your reaction to this latest market action here this afternoon, including the latest reading on inflation we got today.
You know, Frank, it's kind of interesting when you look at, the fact that, and we've all felt this way for a while, inflation doesn't disappear fast. Inflation has a way of sticking around for a very long time. And the fact that the market is moving higher with the knowledge that the Federal Reserve is not going to be lowering rates anytime soon. Hey, I would say this, for those of us who remember far enough back, a 6 to 7% mortgage historically is not that bad. It really isn't. I know for a lot of younger people, it's painful to look at these rates, but this is a normalization the Federal Reserve set out to do. And I think the argument can be made that they probably waited a little too long to do it and had to move faster than they normally would have. But with that being said, keep in mind that you have, one, the dollar's very strong right now, even in spite of the fact that gold is still, pretty much near record highs. You have money, literally you can see it. Just all you have to do is look at the performance of foreign company or foreign country ETFs versus U.S.-based equities, and the stalwart winner are U.S. companies. So again, I know there's a lot of my competitors that like to tell everybody to go with global diversification. And I'm not here to think this is the right time to be doing that. But very, very clearly, this bull run is broadening out. It's not just tech anymore. It's a lot of different groups. And this is the kind of thing you want to see for this to continue going through the rest of this year.
All right, inflation still in the spotlight. Inflation picking up to 3.2%, slightly hotter than expected, as we've seen in recent readings. And we've seen, by the way, the unemployment rate at the highest seen in 2 years. How is the Fed going to take all this in, and what is ahead next for Fed benchmark rates?
Well, here's the thing. Month-to-month readings on inflation are actually very difficult. I mean, you and I can find a lot of different reasons why 1 month to the next things might be shifting around. The employment situation is interesting because when you talk to members of the Chamber of Commerce, a lot of the shifting of the labor force right now is, quite frankly, believe it or not, it's a battle with getting people to go back to an office, and those that are saying, no, I don't want to do that anymore, and people are leaving their jobs. So this seems to be a bit of a head-off right now for a lot of companies trying to normalize things. But I think at the end of the day, inflation is still lower than it was a year ago. Employment is still pretty darn good when you consider what was going on around the world and all the geopolitical issues and all the tensions and all that. And it's just not what people are worried about right now. Companies that have figured out what they have to do to navigate the inflationary times of post-COVID, in spite of all the stuff going on around the world, those companies have clearly been rewarded. I think the bigger problem, and it's getting difficult for a lot of people. I have clients coming saying, Ken, I want to give you more money to manage. I want to step in, but the market is making me nervous. And I think that the tone of the topics has to be that, look, it's not about going out there and buying the hot stock right now, but looking within a sector like tech and say that, look, even within tech, there are some areas that clearly still have room to go. And I'll talk about it in a moment, but like a good case in point, it's IT companies. They haven't had the same run-up as some of the other tech names, but yet they're still very, very strong companies. But I do think the other thing we have to talk about, and this has been a little bit of a surprise to a lot of people, is the simple fact that commodity prices, a lot of core commodity prices, have actually been heading south. When I look at corn and soybeans and wheat, they're all negative on the year. They've dropped dramatically, and it raises the question of what the economy is going to look like for farmers coming out of the winter months in the Midwest. So again, we're going to look at economic growth is going to be very lopsided and just kind of herky-jerky as we move through a lot of the next year to possibly 2 years.
On the air live with money manager Ken Winans, we see the mega cap tech stocks leading the gains today. The so-called Mag 7 stocks have been back in the driver's seat after the NASDAQ composite recorded a weekly decline last week. So what do you think of the Magnificent One, NVIDIA, and the other so-called Magnificent Seven?
And the winner is, right, Frank? The one company. Well, here's the thing. I mean, I track all of them every day. And what you've noticed very quickly is that there are some of the old big names that are big parts of the S&P 500 that are not having a great year. Look at Google. Look at Apple. In fact, I've cut my Apple positions in half. Never thought I would be doing it. It seems downright un-American to sell Apple. But the truth is they need to do more than the goggles. They need to figure out how to make up for the loss of the business out of China. And yet, you look at some other companies, certainly it's not just IT companies. I mean, you look at Amazon, you look at Netflix. I mean, these companies are, certainly Microsoft, they're doing very well. So, again, stepping into these big names after they've had the run they've had, again, you caution, maybe don't jump in with a full-size position. Maybe a half position. That's what we do in money management when things get a little rich. But Frank, this is the thing I wanted to bring up besides the fact that I think that anybody in the audience who has their advisor telling them about global diversification, I'm just going to tell you, when I take a look at these foreign ETFs, and it would be it's so tough for me after the run that some of these agricultural or these commodity-based company or country should have had. I mean, I'm looking at Australia, the ETF for Australia, 0 on the year. Canada +3, France +5, Germany +6. And you compare that to what's going on with U.S.-based stuff. And in the big news came out of Brazil today. Brazil is actually blown up because of a situation they had with their commodity-based lending structures. That ETF's actually down 7. So I think, number one, I would stay with American companies. Clearly, this is the place to go. But the other item that's interesting is when you, again, look at the industry sectors, tech is clearly the big winner, whether you're looking at this year or including last year. But the number 2 group that I'm monitoring, and I'm just talking about even just ETFs, home builders. Who would have guessed that the home building ETF, symbol XHB, is up 10% on the year and 75% since in 26 months. This is telling you that the housing market is going to be strong this year in spite of the mortgage rates. And I think you go with the old adage, trend is your friend. And when you got tech and home builders powering this market ahead, that's usually a pretty darn good sign that 2024 will be a good year in the market.
On the Live with Money Manager Ken Winans, the banking sector back in focus, and so is commercial real estate with this news that New York Community Bank Corp stock rose today after the lender closed on about $1 billion capital infusion led by former Treasury Secretary Steven Mnuchin, a Southern California resident who has a private equity firm. We see New York Community Bank Corp shares moving up about 6%, also unveiling a 1-for-3 reverse stock split. This has been the latest bank in focus as it relates to the commercial real estate issues. Ken, what do you see ahead on that front?
Well, here's the thing. I mean, when I look at in my list and I look at all the regional type of home builders, or excuse me, banks, I mean, the whole group has been very volatile ever since last year. And when I'm looking here at, good grief, you can go right down the list. But there's a lot of these, small, like Huntington Bank shares, First Horizon, Associate Bank Corp. These are, and by the way, these are old banks. These banks have been around for a very, very long time. But if you are considered a regional bank, a lot of the big institutional money has been steering clear of them. So unfortunately, now if you're a value investor, I'm sure Mr. Buffett, who prides himself on this, is probably taking a good hard look at these bank stocks. But I think that it's going to take time because of the commercial real estate problem and the overexposure that these regional banks have found themselves in, it's going to take a while to clear itself out. And you're going to have groups like former Treasury Secretary Mnuchin's company stepping in and providing that hard money that keeps these groups going. But I don't think we're anywhere near being done yet with small and medium-sized banks having problems because of their commercial real estate. Now, the other thing...
The Ed Milet Show showcases the greatest peak performers sharing their journey, knowledge, and thought leadership. Sebastian Maniscalco.
I'm a comedian. In my 20s, I wasn't in a company, and I don't know how marketing, sales.
Yeah, you're a brand. You're a company.
Yeah.
And Jay-Z says, I'm a businessman.
Yeah.
Yeah.
To that.
Remind me not to quote any hip-hop lyrics again. That was just a big miss.
When you first said it, I'm like, yeah, he's a businessman.
Yeah, I nailed it at the end. I pulled it together. It just took me a minute.
The Ed Milet Show is available on YouTube or wherever you listen.
I'm often hearing, and you're hearing it certainly in Southern California, Northern California, hearing in New York, there are groups stepping in and they're buying these vacant commercial buildings. And what I'm hearing is the first thing they're doing is they're going over to the city offices to try to rezone these buildings to be a dual business and residential. And I think that will be a theme we hear going forward as they try to figure out what to do with these big office spaces. And again, smart people are trying to figure this out. But Frank, again, going back to the thing, here's a good example. There's a big difference between a regional bank and a big money center bank, or what we used to call too big to fail. And you want to be careful if you're going to try to jump into this group, especially if you think they're cheap. Well, I find cheap can often get cheaper if you pick the wrong time and wrong place and wrong bank.
Boeing in the spotlight. Of course, they used to have huge operations here in Southern California. A lot of people follow Boeing, given the legacy they've left here. Boeing vowing changes after government audit finds lapses in manufacturing quality, which is heartbreaking for a lot of the long-timers here that have been associated with Boeing. We see some of the airlines associated with Boeing Southwest Airlines shares down nearly 15% today. American Airlines down nearly 5%. Give us your thoughts about the news related to Boeing that we've seen in recent weeks with that door being blown out. And apparently the Wall Street Journal says a criminal investigation has been launched into Boeing now following that incident, and the issues related to Boeing and impacting the airlines here.
Well, something to keep in mind about Boeing. In addition to commercial, they're also one of the nation's biggest defense contractors. I think it's safe to say when we talk about too big to fail, that will also include Boeing on the industrial side. The government will do whatever it needs to try to help that company. I think that it's almost surreal when you think about these Boeing planes I've flown recently. I was on one of the 737s. I mean, there are people who are commenting, my gosh, is this plane going to be okay? You had the doors, you had the tire come off, you had the plane skid off the runway. If you're a value person, you can make a case that Boeing might be a pretty good play. But I think, again, there's probably going to be a managerial shakeup, as it was after the 737 MAX computer problems of a couple of years ago. I mean, people do have to fall on their sword and take responsibility. That's the job of top executives in a company. But again, I just don't, people saying that Boeing is going to go out of business, no, it's just too big. I would say that, but before I would buy the stock, I would want to see that they really have fixed these problems and they've moved forward. And I just, it's kind of funny. I'm old enough to remember when if you remember when the SUVs were having big problems because the tires were bad. And, everybody was concerned whether the big automotive companies were going to survive. They did. They just had to make adjustments. But, Frank, we're going to have more and more news like that come out. I still think this is tied to a lot of the logistical problems that COVID produced. And now we're looking at Boeing, but you're also looking at Tyson just closed a big pork plant in the Midwest because of some of these issues that were causing, quality problems. Again, COVID has not left us behind. It's going to take some time to continue to work this out.
On there live with money manager Ken Winans, and quick thoughts on crypto. Bitcoin above 72,000 recently, Ken, hitting record highs. The others coming along for the ride, it looks like. Any thoughts about what you're seeing there?
Well, I mean, the old adage, friend is your friend, and I commend the people who were hardcore crypto. I mean, I was certainly wrong on it. I thought it would take much longer for it to recover the way it has. The only thing that I would just have anybody question me on this, it just correlates very strongly with movements in stock price. It does not move with currencies. So again, you have to realize what it is that you are buying into. But when you also read that there's some big shuffling going on, appeared to what I read earlier today, there's quite a few people cashing out of the Bitcoin ETFs and raising cash. So, you want to be careful you don't want to be the last person to the party. But with that, I think that it's another sign that there is money coming back into the United States. Money is going into U.S. innovations like crypto ETFs. That's a U.S. innovation. There are these things happening. So, again, I mean, certainly many people in my industry are now beginning to say, hey, you're right. This is an alternative. We have to begin to talk to our clients about it. But as I've said many, many times, I think it should be treated just like you would commodities. It's an alternative. It's an important part of people's portfolio, but it should not be done by itself. I think you should do it in light of what people are doing with gold, what they're doing with other types of commodities, and crypto could be included in that conversation for the mainstream person. But again, just let these things play themselves out.
All right, we see gold, by the way, which recently also hit a record high, pulling back slightly today at $2,164.40 an ounce here at this moment. Oil, by the way, just pulled $78 a barrel, near its high point of the year. At this point, Ken Winans, where are you putting money now and or taking it off the table?
Frank, I'm taking a good hard look. I mentioned it a little earlier in the interview. Basically, looking at I'm going to call them boring tech. I mean, it sounds like an oxymoron, but they really are. And what I'm mainly talking about are the IT-related companies. When you are talking about AI, you're also talking about things like, IT-related services and companies that can help bring that technology to these companies that want it. And so when I'm looking at IT, I'm looking at companies like ServiceNow, symbol NOW. I'm looking at, believe it or not, companies like Thomson Reuters, symbol TRI, Gartner, which is symbol IT, which, by the way, in a Forbes article I did a month ago, I was talking about Apple replacements, and Gartner came up. I would look at companies like Fair Isaac and CGI Group. Again, these are not names that most people know about, but again, these are tech companies that will directly benefit from these big tech trends. And then I'm going to throw the last one in there. I've been bringing up for quite a while about the home builders. I'm still finding people are way underexposed in real estate. I would add SXHB, the home building ETF, to anybody who is tech heavy and just realize that they don't have enough in real estate, because again, it's going to be a strong housing season this year.
Terrific, Ken. Thank you very much for coming to the line this afternoon on a nice rebound day for the stock market, and with that important reading on inflation out first thing this morning, which appeared to have driven the action here. We see a Grayscale, by the way, filing plans for a mini Bitcoin fund. That's just clearing the wires here as we speak. Money manager Ken Winans, president of Winans Investments, author of Investment Atlas 1 and 2, and Forbes magazine contributor. Ken, thank you very much for joining us live here this afternoon.
My pleasure, Frank. Take care.
Folks, if you're hurt in an accident, you need an experienced advocate. And Clark Fielding and his team of sharks at Fielding Law are on standby ready to dive into your case. My friend Clark the Shark is fearless for justice and your go-to attorney when injured in an accident that wasn't your fault. Whether it's a car accident, slip, trip, fall, or any kind of personal injury, Fielding Law is here to make sure you get the care, attention, and compensation you deserve. Fielding Law can assess the circumstances of the case, negotiate tenaciously with the insurance companies, and if necessary, file a lawsuit and litigate to seek the fair compensation on behalf of you, the injured party. An injury is a major disruption in your life. Medical expenses, lost wages, pain and suffering, property damage, and other losses incurred as a result of the injury are all part of the damages. Don't try and handle the process alone. You need an expert in the process. The team at Fielding Law are the ones to trust. Put Clark Fielding in your phone under the word accident. That number is 833-88-SHARK. 833-88-SHARK, or go to clarkthesharklaw.com. Mottek On Money continues here in 790 KBC. The Dow coming in for a closing gain of 236 points, settling at 39,005. Yep, must be about the money. S&P 500 of 57 at 5,175, and the NASDAQ gained 24 at 16,266. The yield in the 10-year note is back to 4.16%. Price of gold pulling back nearly $4 now at $2,162.80 an ounce after hitting record highs recently. The price of oil moving higher, 42 cents at $77.98 a barrel. We see higher prices at the gas pump pushing up inflation more than expected in February. Not a big surprise. You've been listening to this program as we've been watching the price of oil rise, and gas price in L.A., by the way, about 20 cents higher a gallon compared to a year ago. The latest consumer price index came out this morning. That important index showed prices moving higher, 3.2% higher over the past 12 months as of February. That's slightly higher from January's annual reading of 3.1%, also coming in hotter than most analysts had expected. I'm surprised that they were surprised because we've been watching what they should be watching. That oil prices have been moving up, gas prices too. Taking a look at the cryptos, which have been hitting record highs lately, especially Bitcoin. Bitcoin got as high as $72,960 recently. Right now, it's moving up $50 or so to $71,447, hovering just below the record high here. Ethereum up 14 at $3,967, and Doge at 17 cents. Mottek On Money continues here in 790 KBC. Well, one of the few countries to adopt Bitcoin as legal tender has apparently seen an $84 million profit from Bitcoin, boosted by Bitcoin's recent rally. The president of El Salvador reposted a chart on X, formerly known as Twitter, that showed how much the country has profited from its Bitcoin investment that began in 2021. And it's been pretty impressive, as we've seen the Bitcoin hit as high as $72,960 recently, an all-time high. Right now, a Bitcoin up about $50 at $71,447. The other cryptos have been moving higher as well. Ethereum, which popped above $4,000 recently, is up about $14 now at $3,967, and Dogecoin at 17 cents. Remember, it was
Welcome to Talkville.
The Ultimate Smallville Rewatch Podcast. Let's get into Season 4, Episode 3, Facade. People get picked on. I got picked on. But Scabby, the whole school just hurt me. I felt like it wasn't real.
If I may, I want to defend the storytellers. The people who created the show wanted you to feel like these people were the worst people ever.
They pretty much said the whole school of Smallville High are bad people.
Jump in now or catch up on any of the past seasons of Talkville on YouTube or wherever you listen.
At around 6 cents for quite some time. We've been watching that one. We see Litecoin as well. Let's bring up some of the other cryptos here, which have gotten a lot of attention. Litecoin, 97 and change. Monero right now at 145 and change, and XRP at just about 69 cents. Taking a look at the stock market today, we did see an up day in the markets with the Dow popping 235 points higher, the S&P 500 at 57, and the Nasdaq gained 246 points. Taking a look at the yield on the 10-year note right now, which impacts the fixed-rate mortgage rates, which we'll be talking about shortly, right now at 4.16%. We see the breaking news today that Grayscale filing plans for a mini Bitcoin fund 2 months after the GBTC's conversion to ETF. Grayscale Bitcoin Trust is the largest spot Bitcoin ETF, but it's been losing assets amid competition from cheaper rival funds. Delighted to say we're joined by one of the mega entrepreneurs here in Los Angeles, founder of Live One, who will be appearing at the Roth Conference in Dana Point next week. Rob, the founder and CEO and chairman of Live One, driving the company's overall strategy and leading both the Live One, Slacker, and Podcast One business units based right here in Beverly Hills. Rob Allen, thank you very much for coming to the line here this afternoon.
Thank you. Pleasure to be on.
Fantastic. You got a great team. I connected with some of them at Craig's last night, and here we are on the air today. I want to get your view of the world here and in the entrepreneurial space and what's happening here in the Los Angeles area.
Yeah, so, to start with, Craig's right there. You can tell how things are in Los Angeles from that perspective, right? Craig's is jam-packed every night. So it's a weird phenomenon happening, right? There's a lot of great things happening in the city, and there's a lot of things that got to be fixed. So for us, we couldn't be more excited about where Live One is going. We've grown the business dynamically this year, and we just come out and said this year is going to be over 140 to 150 million in revenues, with very substantial EBITDA of over $20 million, and really grow our subscription. We grew our subscription from 400,000 subscribers to 3.6 million.
And you've overseen investments in gaming companies as well, which is also something we don't often talk about on this program, but give us an update on what's happening in the gaming world here. You've been a big investor in Majesco, THQ, Jack Pacific, and many others.
Yeah, and Grand Toys. So, that's who I cut my teeth with. I learned under a gentleman named Jack Friedman, one of the great CEOs. Unfortunately, he passed away a few years ago, but built, two of the most successful public companies in this town, Jack's and THQ. And when you see a CEO and you get the experience of watching him build a company, we build in the same way, right? It's a family, right? It's a real family relationship, and we try to surround ourselves with the brightest minds. We have a board of directors and management team that have created over $100 billion worth of media and technology companies that have real experience in the public markets and really understand the audio business probably better than anybody. And, a lot of my team was trained under Norm Patitz. I'm sure you knew Norm, who built Westwood One. They got the experience in learning over one of the great geniuses in radio. And that's part of how our branding came. And we changed after Norm had passed. We changed the company's name to Live One using that Westwood One and Podcast One name. So just a world-class team, great team. And I think the best thing we do is we outwork everyone.
That is fantastic. We honor the memory of Norm Patitz. Certainly, he was always very kind to me. I remember when he founded Podcast One and tried to bring me in there, by the way. So God bless him, and we honor his memory. Certainly a giant in the world of broadcasting, and you continue to honor his legacy, certainly.
Yeah, I mean, we got the luxury of using that one brand, and that one brand's been around, as you know, for close to 40 years and has created billions and billions of dollars of value. And, we wouldn't change the name unless we felt confident. But we're going to do the same thing here. And, You know my background for Digital Turbine, my last company. Was fortunate enough, after going through a terrible, 2008, we came out of it, and the company, ended up going over a $12 billion valuation. And I feel the same way here. We're in this massive TAM. Music is exploding. Spotify just announced they could have 1 billion subscribers in their platform by 2027. And Goldman Sachs said there's going to be 1 paying subscribers by 2027. So we're in a great position. And having Slacker Radio, which we bought for $20 million, now we just announced $65 million of revenues and $17 million of EBITDA, and Podcast One, which we also bought for $20 million, doing $20 million of revenues, now on a run rate to do $50 million plus this year. We've really built an incredible TAM. We built an incredible flywheel in a huge TAM. And I just see this year is going to be a spectacular year. All of my companies, very humbly, when they break that $100 million mark and really have, clear path, right, to $250 million, is when we can really start turning that from a growth story, right, to really huge EBITDA and earnings down the line.
Well, you've been at the forefront of transformative digital technology and media. What do you see ahead, and what are you going to be telling the folks at the Roth conference there in Orange County next week?
Well, the first thing is we just came out and announced our first ever multi-8-figure deal with a Fortune 500 company, one of the biggest streaming partners in the world. And not only is that like $2 million a month in revenues that's just starting to ramp up, but on top of it, all that traffic and audience is also going to drive to more subscribers, more advertisers coming to our platform. So that's one of the most exciting things that have happened, in the history of the company. We also have this very unique partnership. We just expanded our relationship with Tesla for the 11th straight year. We extended another 18 months. This morning, I woke up to 7,600 new cars on our platform, right, from Tesla. And they pay us directly every month. We've grown now for 11 straight years. Every month we grow, every quarter we grow, and every year we grow. And, and just watching Tesla, and the opportunity to grow with them is magical. We've just added our podcast in the car. So brand new revenue stream and advertising coming out of it. We've just added across 1.3 million plus cars. We've added, 100 of our podcasts onto the platform. And we just announced, just recently, we're going to be adding audiobooks as well. So it's going to be a third leg of the stool of audio. And then our team is huge believers in the future of self-driving cars, right? These cars are getting smarter and smarter. The AI in Tesla, it's, I have and my kids have Teslas. They drive amazing. They're getting better and better from a self-driving standpoint. And I believe humbly that, there's going to be very shortly, there's going to be self-driving cars in the road and, in size. And when that happens, Uber and Lyft and rental cars and so on are all going to be moving to that. And it's just going to expand media, which is going to give us an opportunity not only to have our audio in the cars, but to add our videos in the cars.
Well, fantastic, Robert. We appreciate it, and we wish you and your team all the best. You've got a great team, as I saw last evening, and thank you so much for taking the call here today. That is Rob ELLIN, the founder, CEO, and chairman of Live One, based in Beverly Hills. Thank you very much for joining us live here this afternoon.
Thank you so much. Have a great day.
You too. Thank you very much. Mottek On Money continues here from 790 KBC. We're doing it live right here in the 4 o'clock hour. Mottek On Money, weekdays at 4. Live on the air, 790 KBC, streaming live online worldwide at kbc.com and the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, and all your favorite podcast platforms. Mortgage rates appear to be easing just a bit in time for the spring home buying season. Home prices, meanwhile, kissing record highs based on the latest reading. Let's get an update on what's happening out there with Fred Solomon, Solomon Financial Mortgage and Realty, based right here in Southern California. Fred, thank you very much for coming to the line here this afternoon.
Hi, Frank. Thank you.
They say all real estate is free here in Southern California. What you pay for is the weather. We can say that today. Absolutely gorgeous afternoon here in Southern California. Give us an update, first of all, on how the mortgage rates are looking this afternoon.
Well, rates are basically flat from the inflation data that just came out. The CPI came in at 3.2%. It was expected at 3.1%. The yields on the 10-year Treasury are up about 5 basis points today, up to 4.15 on the 10-year. So we're still hovering right around the 7% range for mortgage rates on 30-year fixed. The 20 years about 0.25% lower than that, 6.75. And, there's this really great website that I texted to Art, and I told him to send that to you. And it's basically the futures of what the likelihood of when the Fed is going to be lowering interest rates. And if you're okay with me giving out that website so people can watch and learn like what the likelihood of when the Fed will drop interest rates this year, I'm happy to do that. And basically June, it says in June of 2024, there's a 66% chance that the Fed will drop interest rates. And then in July, there's an 85% chance that the Fed will drop interest rates. So it's just a little tool that's out there for people to, read and pay attention to.
Absolutely, I see that, and this is the tool that the Fed uses to there's a Fed Watch tool, basically the CME Fed Watch tool, so you can stay up to date with the latest probabilities of a Fed rate move, and we'll get that next meeting coming up here in about 7 days or so. What do you think the next move will be?
Well, they're not going to do it. According to that, there's a 99% chance that they're not going to do anything at the March meeting. And the first likelihood of something happening would be in June of this year. So the Fed says they're going to be lowering interest rates 3 times this year. The Fed target rate is 2% annual growth. Right now we're at 3.2%. Last month we were at 3.1%. So they want it to go down to 2%. But if you take out the core inflation with rents and with gas, you take out the core inflation, and it's still growing at 0.4%, which was above expectations, according to what the Fed was expecting. And so, we just have to watch the probability. And the big one that's coming up this week is the producer price index. So these stats come out all day, every day, all week long. So it's a constant. You're just watching and grabbing your popcorn and seeing what's happening with inflation, which is what's going to determine where these rates go.
All right. In the meantime, based on the latest readings on prices, we see prices hitting basically record highs here once again. And great that mortgage rates are coming down, but in the meantime, prices are going up. What do you see ahead on the price front?
Well, when we have lower interest rates, and the Fed actually does lower interest rates, and people aren't selling in record numbers because they got 2.75%, and the current rates are 7%. If we have more buyers and the same amount of inventory, guess what's going to happen to the number of bids? When we go, summer is the busiest time of the year for the housing market. So we have, the busiest time of year coming up, lower rates. It's like asking, it's a beautiful summer day at Disneyland. It's 80 degrees and ticket prices are half off. Are there going to be more people or less people at Disneyland? And so my feeling is we're going to have more buyers, and if we have more buyers, we're going to have higher prices, and that's where I see the market going.
All right. I have a feeling you're going to Disneyland, Fred, so thank you very much for joining us live here. Look forward to your next update. Fred Solomon, beautiful afternoon here. Fred Solomon with Solomon Financial Mortgage and Realty, based right here in Orange County. Fred, great to speak with you as always. Thank you very much for taking the call here this afternoon.
All right. You have a good one, Frank.
All right, you too. Thank you very much. And coming up next, stay tuned for the 790 KBC News Blitz with Randy Wang, and tune in again tomorrow afternoon at 4 for Mottek On Money here on 790 KBC.
What's up, folks? Anthony Armstrong here.
Bob Papa along with Super Bowl champion Carl Banks.
Hey, NFL fans. This is Solomon Wilcox, former NFL safety and host of the Believe in Bengals podcast. Catch my show and all 32 Believe NFL podcasts. Listen in to former players give their inside perspective on your favorite team. Search Believe, that's BLEAV, on Apple, Spotify, and wherever you get your podcast.
It's always football season, wherever you listen.